Good morning and thanks so much for tuning in. Welcome. This is NDTV Profit. My name is Alex Mathew and you're watching All You Need to Know. Like the name suggests, over the course of the next half an hour, we'll tell you everything that you need to know to start your day on the right note. Let's start with the headlines. US equities end higher as the market awaits December inflation data and major bank earnings. Microsoft's gains help the Nasdaq climb about 0.7% as the company nears Apple's market cap. The US allows first listed exchange-traded funds to track the Bitcoin. India, on the other hand, escalates clampdown on offshore crypto exchanges like Binance. IT giants TCS and Infosys will kick off the earnings season today. Analysts expect a sequential drop in revenues of both companies. The IT department finds unaccounted cash sales of 1,000 crore rupees and 400 crores of cash payment at Polycab. Moving on, big business groups promise big investments in Gujarat, and the Adanis will invest over 2 lakh crore rupees. Maruti and Tata want to make the state an EV hub. Now, it's going to be a busy Thursday. First, you'll have the largest Indian IT companies, Tata Consultancy Services and Infosys, report their results for the third quarter. And we're preparing for a not-so-pretty picture here. And then later in the day, the data point that global markets have been watching for, the latest CPI print in the US. Treasury yields have been volatile, to say the least, in the last few weeks. And the latest inflation figure, is expected to provide more clarity on the likely trajectory of the US Federal Reserve's interest rate cuts. Overnight, the yields on the 10-year Treasury stayed above 4%, and US stocks ended positive, with the Nasdaq Composite leading gains up about 0.75%, and the Dow and the S&P 500 gaining about 0.5% each. But even as traders kept one eye on the inflation data, the other eye was focused on an asset that hasn't gotten too much attention of late, at least here in India. Crypto assets rose across the board after the US SEC yesterday approved the first list of US exchange-traded funds to track the Bitcoin. That is, of course, the largest token. This has apparently been in the works for a decade and is being considered a watershed moment because it will allow both institutional and retail investors exposure to the world's largest cryptocurrency without directly holding it. Now, this is important from the India's context because as things stand, remember, the government has made it very expensive for Bitcoin and other cryptocurrency to be traded and invested in. As of now, the tax implications on investing in an ETF is not clear, but it could well be that you could invest in this through the LRS route. We'll bring you details on that in just a bit. For now, let's turn back to the equity markets and tell you about what you should bear in mind on the weekly expiry day. Agam is joining in to give you some perspective on that. Late moves in yesterday's session, Agam, to push the indices in the green. What are we looking at weekly expiry?
Alex, if you look at what's happened over the course of the last 10 days, Nifty has moved sideways. We really haven't seen too much change. And yesterday, while there was the Bank Nifty expiry and there was a little bit of an up move towards the end of the session, on the whole, if you just zoom out just a tad bit, you're going to notice that there has been consolidation in both the benchmark indices. The question is that, can we expect the benchmarks to resume a trend, an upward or a downward trend, now that we're going to start getting earnings? Well, that's a wait and watch. But for now, we did see unwinding as far as the Nifty futures go, to the tune of nearly 2%. The Bank Nifty futures also seeing another unwinding of around 3.5%. Moving on, as far as the option space is concerned, that's of course going to remain in focus considering we have the weekly options expiry today. Keeping an eye on the 300-point range between 21,800 on the higher end and 21,500 on the lower end, because 21,500 has the one with the maximum OI in terms of puts, and the one on the higher end is the calls. In terms of change in open interest as well, we did see a lot more traction around the 21,500 puts coming through in terms of writing. Coming down to stocks, let's pull up that list of all the stocks which are in focus. We saw longs in Z Entertainment, JK Cement and Vedanta, PVR, Inox, Ramco Cement. We did see some shorts building in. And in terms of some amount of short covering, we saw that in Nalco and Delta Corp, BPCL, Chambal Fertilizer and Gujarat Gas. So longs and winding else.
So much, Agam, for bringing us those details. Let's move on to earnings. And like we said, we're focusing in on Infosys as well as TCS. Tushar has got the key numbers that you should focus on. Tushar?
The bellwethers of Indian IT, TCS and Infosys, will declare the December quarter earnings today. While seasonality will be, of course, in play, the numbers may just be worse than expected. First up, let's take a look at TCS. A rare decline in revenue is likely due to furloughs, general slowdown in the IT sector, and lack of discretionary spending. There will be a positive impact of TCS BSNL deal, but how much of that will offset the pain remains to be seen. TCV is in focus, for that will show how demand will shape up in the rest of 2024. The EBIT margin will be flat because operational efficiency will be offset by furloughs. Now, coming to Infosys, it will be more of the same like in the lines of TCS. Again, flat to negative growth due to, again, furloughs, general slowdown, and lack of discretionary spending. Again, there's a large deal that Infosys stuck in the last quarter that was of Danske Bank. The ramp-up of that deal may offset some of the pain. The EBIT margin, however, for Infosys will decline due to absence of margin levers. Remember, Infosys gave out wage hikes in the third quarter. Now, what to watch out for? Infosys gives a guidance, so any cut or status quo should set the tone for the rest of the year. We have to also watch out for the reasons for the cancellation of the $1.5 billion AI deal and whether that impact will spill over into other deals. All in, TCS and Infosys will set the tone for the rest of the IT pack. There will be outliers for sure, but there's a pervading sense of a slowdown that's likely to persist for longer.
All right. Thanks so much, Tushar, for those details. We'll bring you more analysis over the course of the day leading into those results. We have to slip into a very quick break. There's more stock-specific action on the other side, so do stay tuned. Welcome back. You're watching All You Need to Know. Time to look at a few stocks that are in focus and will likely move in trade today. Mika is joining us first to tell you about a few on her list. Morning, Mika. What's on your list today?
Good morning, Alex. So first we have CESC, where its subsidiary Noida Power Company has received an order from the Uttar Pradesh Electricity Regulatory Commission. Now, the order is for a power purchase agreement for the procurement of 95 megawatts RTC power per annum, and this contract is a period of 5 years. Then we have Axis Gates Technology, where it's launched its 500 crore QIP on Jan 10th. Now the floor price is set at 696.7 per share, and this floor price is at a 9.9% discount to the previous close, and the company will offer not more than 5% discount on the floor price, and the company is also set to issue price on Jan 15. And then finally we have SpiceJet, where on their 39th annual general meeting, the chairman and managing director unveiled growth and network expansion plans, and the company is going to infuse 2,250 crore rupees into the company. SpiceJet is also going to launch flights to Lakshadweep and Ayodhya. The airline has gotten exclusive rights under the government regional connectivity scheme for its flights to Lakshadweep.
Thanks so much, Mika, for those details. Small clarification there. Those exclusive rights are based on summer schedule and winter schedule, and they could, in fact, change over the course of the coming months. Let's talk about another stock in focus, that is Polycab, and this is related to an IT raid that was conducted. A few more details emerging there. Smriti is joining in to give you some perspective on the latest and what the likely response from the company will be. Morning, Smriti. What can you tell us?
Good morning, Alex. Yes, we heard news about Polycab, and they confirmed it also a couple of days back. But yesterday, last night, in fact, the Income Tax Department came out with details about the raid. So the search and seizure operation on the company was conducted on December 22. Now, this was conducted across 50 locations in Mumbai, Pune, Aurangabad, Nasik, Daman and Diu, and Delhi. Let's look at what the Income Tax Department found during these search operations. It says that it found incriminating evidences that revealed a modus operandi of tax evasion in collusion with its authorized distributors. It's important to note that these IT raids were not just conducted on the company, but also its authorized dealers. So that's where the company and the distributors colluded. Now, the preliminary analysis, according to IT department, says that they found unaccounted cash sales of about 1,000 crores. Now, this means that the company made sales and took cash for it, and those are not recorded in the books of accounts. So that's one part of it. Second, they found evidences of unaccounted cash payments of over 400 crore made by distributor for raw material. So that means the authorized distributors were buying raw material on behalf of the company in cash. So that's the amount that they talked about. Then the IT department also said that they found non-genuine expenses like subcontracting expenses, purchases, and transport expenses aggregating to about 100 crore. So that means they were showing 100 crore of expenses, or those are the allegations rather, in the books of accounts, but they were fake or non-genuine.
Right.
The last one is authorized distributor facilitated certain parties to inflate their purchase account. That means they showed more than what the fair value of the purchases were. This is about 500 crore according to the Income Tax Department. Now, it's important to understand that these are just allegations at this point. There's no demand notice that has been sent to the company, or the company hasn't come out with a clarification on this yet. It is very likely that the company will contest this whenever the demand notice is issued. Right. So it's important to look at that these are just allegations at this point. No demand notice yet.
Right, Smriti. Got it. Got it.
So that's where we are at.
Absolutely. Yeah. Thanks so much, Smriti, for bringing us those details. Certainly a stock to watch out for in trade today. Let's focus in on the financial space as well. And we've got details on Bank of India as well as Phoenix Mills, which reported their third quarter business updates. Harsh is joining in to give you some details on that. Harsh, what are you picking up?
Well, yes, Alex, good morning. Let me quickly first take you to Bank of India. You had your provisional business update, which came through strong growth with regard to advances. We saw growth of 4.2% sequential on the advances front, 11.5% on a year-on-year basis. We're also seeing deposit growth of just about 1%, in fact 0.9%, so tepid on the deposit front. But when I'm looking at it year over year, It's an 8.7% growth on the deposit front as well. Now, with regard to where your LDR stands, not much of a concern there, sub 80%, and therefore, that deposit growth number may not have a major impact or a major problem in the immediate future. So that's one positive. ICICI Securities expects the ROA to hit 1%. Now, this is significant in this quarter because it's not done so for a very, very long period of time there, Bank of India. And of course, you have the wage provisioning also coming through. So keep your eye out on that one. Very quickly moving on, we also have Phoenix Mills, which came out with its update. Total consumption for the quarter saw a good growth. We saw 24% growth, but on a like-to-like basis, this of course includes some of the new stores that they've launched. On a like-to-like basis, the growth was just about 4% in Q3 on a year-on-year basis. Gross collections, though, have grown 30% year-over-year. Around 700 crore is where the gross collections for Q3 FY24 has come. With regard to their hotels business, average revenue per room has gone up consistently across hotels. So that's another positive coming through. Of course, the new mall openings are definitely aiding some of those numbers.
Thanks so much, Harsh, for bringing us those details. Let's shift focus to L&T, and the stock is up as much as 67% in the last 12 months, and it has hit a 52-week high in trade this week itself. My colleague Anushi is joining in to help you understand what that means and why it has outperformed in FY24, likely its order inflow guidance. Over to you, Anushi.
Absolutely. Quite a remarkable quarter for L&T over here. So if you look at the order inflow for Q3 FY24, that stands in the range of about 53,500 to 82,000 crores. Now, most of the orders, if we look at, they culminate from its hydrocarbon business in the Middle East section. So if we look at the graph over here, so there are about 32,000 to 37,000 crore of orders coming from its hydrocarbon business, followed by about buildings and factories, which has about 6,000 to about 12,500 crores. And then there is power transmission and distribution and green energy EPC, which takes about 5,000 to 10,000 crores of order value. So now, just to make a sense of what kind of orders the company has posted, it has a Dahisar Bhayandar Bridge construction, then there is construction of Bhogapuram International Airport, which was in focus, and Bangalore and Hyderabad residential towers. So accounting for all this, the 9-month FY24 order book stands at about 2.08 to 2.37 lakh crores, which shows about a 40% upside from its 9-month FY23. So quite a strong growth picture over here. Again, just to make a quick note that the L&T has said that it is outperforming its 10 to 12% order guidance that it had made in the FY23. So if we look at the FY23 order guidance, that stands at about 2.31 lakh crores. So that 2.31 lakh crores. So if we just look at the 9-month, that comes at about 2.37 lakh crores. So it is exceeding its FY23 order inflow growth just in the 9-month period itself. So again, if we look at the 10 to 12% addition over here, so we have about 20,000 odd crores of orders remaining for the fourth quarter to exceed its guidance given. So that is all on L&T, but just let's get a look on the PE valuations also. If you look at the PE valuations, L&T is trading at about 45 times compared to its 3-year average of 47 PE, which is still significantly lower than its participants than ABB, KEC and other peers.
Right.
So that is all on L&T you should be watching out for.
Fantastic. Thank you so much, Anushi, for bringing us those details. One last story that we have to deal with, and the SEBI has proposed additional regulations for the real estate investment trusts as well as InvITs regarding the issuance of subordinate units. What are these units and what you need to bear in mind? Charu is joining in to give you some details on that. Charu, what can you tell us about this latest update?
Hi, good morning, Alex. So, Security and Exchange Board of India has proposed additional set of rules regarding the subordinate units that can be issued by real estate investment trusts and infrastructure investment trusts. These are particularly going to deal with bridging the number of subordinate units that can be issued by these trusts to, basically bridge the gap between the sponsors and these trusts. So, the limit at which this has been set is 10%. So, according to the proposal, proposal, the number of subordinate units issued during asset acquisition has been set at 10% of the assets total price, and additionally, total outstanding subordinate units should not surpass 10% of the total ordinary units at any given time. And the proposal addresses the nature of inferior rights associated with these subordinate units, which basically says that these units should either have inferior voting rights or inferior distribution rights. And to be fair, the regulatory body has also asked for public comments on the same. They have asked comments on basically one of the three options, which are subordinate units with no distribution or voting rights, subordinate units with inferior distribution and voting rights up to 10% of corresponding rights on ordinary units, and finally a combination specifying a range of inferior distribution and voting rights as compared to the ordinary units.
All right, thanks so much. Thanks so much, Charu, for bringing us those details. We have to draw this particular show to an end. But before we leave you, do take a look at this latest infrastructure project that could change the lives for many Mumbaikars. The Trans-Harbour Link project opens tomorrow. Here's a ground report.
The much-awaited dream project of Mumbai is coming to reality as the Mumbai Trans-Harbour Link is set to open on 12th of January. It's going to be inaugurated by Prime Minister Narendra Modi. The link helps you reduce your travel time that takes from South Bombay to Navi Mumbai. With the help of this link, it's going to take you about 20 minutes, which typically has been taking you more than 2 hours. It is also going to help you to reach places such as Bangalore, Pune and Goa.
Many are firsts for India's longest sea bridge in terms of technology advancement. We spoke to MMRDA Chief Sanjay Mukherjee, who elaborated more on this.
इस ब्रिज के लिए हमने अगर टेक्नोलॉजिकली हम सोचे तो कुछ ऐसे टेक्नोलॉजीज यूज हुए हैं जो पहली बार भारत में इस्तेमाल हुआ है. उसमें से उल्लेखनीय अगर देखें तो लॉन्ग स्पैन्स, यानी 180 मीटर तक के 4 स्पैन से इसमें 150 मीटर के स्पैन से 165 मीटर के स्पैन से 140 के स्पैन से. इसके लिए एक विशेष जापानीज टेक्नोलॉजी ऑर्थोट्रोपिक स्टील डेक इसका इस्तेमाल किया गया है.
We started from Shivri and we have crossed more than half of the length of the bridge. As you can see that we have crossed about 13 kilometers from where the bridge was started. Let me remind you that this is India's longest sea bridge because it covers more than 21.8 kilometers in area, out of which 5.5 kilometers is made on top of the land and the remaining 16 kilometers is on top of the sea. And as you can see that we are on top of the middle of the sea.
The Commissioner also spoke about how environmental impact and marine lives were taken into consideration while building the bridge. Noise barriers have been put up along with measures to ensure number of flamingos migrating through this route stay intact.
That was quite a tour of India's longest sea bridge. Now let me tell you, it does not come free of cost. You will have to pay about Rs 250 as toll for using the bridge, which will be collected automatically without you having to stop at any booth for paying the toll. It's called the open tolling system. It's first of a kind used in India.
welcome to India Market Open. It's Thursday morning. Global cues are solid, but the big cues or the big action in the markets will watch out for today, Tamanna, is going to be earnings from the IT pack.
Yes, the Q3, frenzy of earnings begin, and with it, the big boys, IT, big ones, Infosys and TCS. We're going to have a very clear preview for you and inputs of all the scenarios that you can possibly see with these two results, how it will kick off the entire season, and especially for the IT sector. But just very quickly, let me go through what the cues are globally, and suffice to say they are good, they are positive. US stocks have closed higher overnight ahead of key data that is expected today. Remember, CPI for the month of December is expected, and 3.2% is what is estimated. Now, why is this important? If I had to say it in Hindi, it's a doodh ka doodh, pani ka pani moment. If you're expecting the Fed to start cutting rates, the data, the economic data, has to also tell that same story. So, which is why that data is important. The US 10-year, in fact, showed that volatility dipped below 4% at one point, but has ended up above 4% as well. Oil, the other big story, record kind of inventory of crude in the US, which has made it very clear that there is going to be a glut. Just to give you perspective, 1.3 million barrels in the week ended Jan 5th in the US were seen, compared to an expectation of a drop of 700,000 barrels. So you are seeing enough crude, also fears of demand coming in because of these high inventories. And last but not least, I must put the focus on what's happening in Asia, and we'll pull up Asia stocks. The Nikkei, on a dream run, is above 35,000 right now. And these are the highest levels for this index since 1990. So Japan, economy is looking good. Asia is firing. Look at it. All the indices, they're up in the green. Nikkei up nearly 2%. Does that portend for what we're going to see in India is the question. And, that really is what we will look at, Samina. Even though FIIs were net sellers yesterday, DI has bought about 2,000 crore rupees. The focus over here, or the basic premise over here, does look positive at this point.
It does, actually, and in fact it looked positive very surprisingly towards close in yesterday's trading session. So after spending most of the day in negative territory, the markets, remember, staged a very smart recovery towards the last 45 minutes of trade. They took the markets from the day's low point to close in positive territory. The Sensex and Nifty both added significant gains. The Nifty 50 went home with 74 points, ending the day at the day's high. The VIX as well dropped about 2% giving some comfort to the bulls. The PCR, on the other hand, has actually risen marginally from 0.88 to about 1.06, indicating the increase in a little bit of bearish sentiment. Now, in terms of cues, remember, Tamanna mentioned you've got that inflation data that US markets will be watching out for. Oil also is down about 1% in yesterday's trade, and on Tuesday as well, what we did see was the markets taking support at the 20-day moving average, which is 21,488. That, remember, will be an important level of support for the markets over the next couple of weeks. A breach of that could take the Nifty back down to levels of 20,973, which is your 40-day moving average. On the upside, of course, if we take out 21,763, we could be headed all the way up to 21,800. But that is being a little more optimistic. Today we also have Nifty expiry. So range-bound session with a positive bias on back of strong global cues.